Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Wednesday, May 21st. Going to go over the usual tickers, and then I've also got AMC, BBAI, SoundHound, WOOF, Speed, and Peloton on the list. So I'll be going over those in that order. But first, I'm going to go over the usual tickers beginning with the UVIX, which is the 2x long VIX futures ETF, which closed yesterday on Tuesday, May 20th at a price of $28, being down almost 1.5% on the day, but bouncing about 3% up to 228.88 in the pre-market. And so we can see yesterday's candle here, and if we do flip over to the 10-minute time frame, we can see what happened yesterday during market hours, kind of up and down throughout the day into the after hours, maintaining where it closed at before bouncing a little bit and then seeing this rally into the overnight, and now pre-market having hit a high during the pre-market of 29.56. So, kind of an interesting day there on Tuesday without, a real trend, just closing a little bit lower than it opened. But then, looking over at the chart here, just trying to think about the volume here. Bigger volume here on this down day, slightly lower, but still a pretty big amount of volume, a large amount of volume here with a very low spread on that candle. So that does seem kind of odd, kind of reminds me a little bit of the candle over here. So maybe we get a bounce today, maybe not. But really, this is just, as I kind of have illustrated here, looking like a bear flag, downside move, and consolidation. And that would be suggesting that price could be coming down to around $12 here. It looks like at 11.53, but that's just approximate. So 11 to 12, somewhere around there. So that's a pretty big drop from where we're currently at. So good to be cautious of this one. Doesn't look like we've gotten really, that notable of a rally. Not even like the rallies that we have seen in the past year. But I should also note too that the big rally that we saw here leading up to August 5th, we hit that high of 199.70, but I should also note that is prior to a reverse split, which we can see should be, actually, I don't know that I have, let's see, show layers, corporate action. So, we got a reverse split there, 1 for 10. So this is adjusted, so this would actually be a high of $19.97. But anyways, pulling back, the bounces that we saw following that were not as big. So maybe that's just what we're seeing. We're seeing a settling out of this before the next rally, but it could, like I said, be going down to $12 or so. But really, I've got the alert here at 25, that having been, let's see, the low over here was 25.85, it looks like. And I think that 25 was a level I was looking for us to test back then. Maybe we see a test of that level in the near future. But as of right now, don't have any buy orders on this. Do have, I believe, 8 shares, hoping for a move up for about 20%. But maybe that won't happen. And currently, this downtrending level here, if we got up to that, that would be bringing us to around $36 or so. But we also do have this gap to the upside that has yet to be filled at 38.12. But just because there's a gap there doesn't mean that it has to be filled. And then flipping over to the VIX, which is the market volatility index, did close yesterday at 1809, being down 0.28% yesterday, which, in comparison, the UVIX was down about 1.5%. So kind of a big difference there. We do still have this gap to the upside for the VIX that would be getting to a price of around 2190. And this has just been a downside move with consolidation. So that does make me think we could be heading lower, perhaps to right around $15 a share. So maybe we've got about $3 more to the downside to go. So again, good to be cautious with this. But when looking at the VIX in the pre-market, up almost 3%, maybe we're going to be seeing a pullback in the markets, and that would suggest a rally with the volatility. And speaking of the markets, let's flip over to the SPY, which is the S&P 500 tracking ETF, which closed yesterday at a price of $592.85, being down 0.34% on the day. But actually looks like continuing down, which makes sense because the UVIX is up in the pre-market. So continuing down in the pre-market here, currently trading below $590, down about 0.5%. And so maybe what we can see here is the beginning of getting rejected from the top side of this rising wedge here, which would suggest a pullback. And I have it, based on this doodle, suggested that it could be coming back to a price of around $570 before maybe bouncing, maybe going higher, or maybe this being the local top, which was hit on Monday, the 19th, at a price of $595.54. We do have some gaps to the downside here around $564.34, and then here at $554.54, also corresponding with this orange uptrend, which does have some historical significance in my view, going back to the low on April 19th of 2024, as well as the low of August 5th here. And so those two pivot points, we did, break through them over here. Maybe we do pull back to them, but then maybe find them as support. So it'll be interesting to see that. If we do look at the volume here, just trying to get an idea of this. So these green candles here, let's see, let's just pay attention to these three candles. We do have an upside move, big green candle, volume here. Volume's a little bit higher, but the spread on that next candle is smaller, so there's some divergence there. Then we get a bullish engulfing candle with a wide spread, divergence, given that this is a smaller amount of volume than the previous day with a smaller spread. And now it looks like, maybe that's a dragonfly doji, and this is going to continue higher. We do see lower volume, but really it's just been consolidating up there. So it's kind of tough to say if this is forming a top or if it's going to be pulling back. And if we do look over at the 10-minute time frame, we can see what happened yesterday into the after hours, overnight, and now pre-market. And we can see that this did just pull back, bounced a little bit here, hitting a low on the day at a price of $589.61, although over here it does say $589.60, so that's kind of interesting. But yeah, then it did bounce into the after hours, pulled back a little bit, but continued up a little bit before then fading in through the overnight, bouncing around this yellow line here at 589.32, which may be significant, maybe not, but that's currently right around where we're at or just above it, having hit a low during the pre-market of 587.60. So pretty interesting to see that. We'll have to see where it takes us, and then also perhaps getting some better levels looking over at the SPX, which is the S&P 500 index, closed at a price of $5,940.46, being down 0.39% on the day. And yeah, basically just the same type of deal talking about with the SPY. This could be coming back to filling this gap here around $5,690, right around there. Does look like I've got an alert set up right around there. So 5,670 is where I've got an alert there, but that's actually for above. So I don't think that's really too useful of one, but maybe I'll change that to below to make that a more useful level for us to be paying attention to. But yeah, I think it will be very interesting to see if these break to the upside or the downside. And I think one thing that might be an indicator for the direction of the SPY, or maybe it's a counter indicator, is going to be Bitcoin, currently trading just below $107,000. And we got some news earlier this week that the Genius Act, I believe that's what it's called, which is the stablecoin legislation, that has advanced to have a final vote, I believe, on Friday. And so what I think might be happening with Bitcoin is maybe there's going to be sell the news, whatever happens with that, or maybe it's going to trigger a rally into and over the weekend. But we do have this 100% Fibonacci extension based on the levels from over here, and that is at a price of around $108,000. And we do look at the prior highs, they were at just above 109,000. So if we do get some good news leading into the weekend, lower volume on the weekend, and people getting antsy wanting to add to their ETFs, but not able to do it over the weekend, we could see Bitcoin really taking off. Maybe people getting some last minute ETF buyers on Friday before the weekend, also a holiday weekend. So, that gives us 3 days of suspense. Bitcoin could be, hitting all new all-time highs, maybe going up to around 115. That is a level I think we could start to see some resistance. But Crypto Rover, he's been talking about it getting up to around 130, 140. I feel like that's a little ambitious, but if you're getting to, a notable top, you kind of want it to be overbought above the level that you expect. So I'm kind of expecting it to top around 115, but if it does go higher, that might be a really nice time to trim before a pullback, just like over here, having hit a high on approximately December 17th at 108 and then pulled back to the lows over here, really just being at this level at $92 and $93. So those were some really nice dip buying opportunities from that high. It did represent, a 10 to 15% reduction in price. So, nice to trim at the top, buy back here, trim at the top. And then, just like looking at this pullback, I don't think the pullback that we would see over here would be as notable as this one, but this represented, a 30% reduction in price. So good to be, planning around that. And also speaking of, potential breakout, we have been consolidating around here for about 2 weeks. And so the last time over here, we did consolidate for 2 weeks before breaking higher. And so I would expect something to be happening either by the end of this week or over the long weekend. But then now looking over at Ethereum, this has also been consolidating to the upside, trading currently around $2,500, consolidating in this range. And just like over here and over here, we had 2 weeks of consolidation before the next up move. And interesting with ETH, this is kind of different from what we saw with Bitcoin, is where the upside moves were getting a little bit bigger, I believe. With Ethereum, the upside moves were getting a little bit smaller. I should say. I guess it's kind of arbitrary, and I did get my words mixed around there, but whether it's bigger or smaller, I guess it's debatable. With Ethereum, they've clearly gotten bigger, so that makes me wonder maybe this is going to see a pretty big rally over the weekend or towards the end of the week. So that could be, pretty exciting. And also just thinking about Ethereum contrasting with Bitcoin, these are the two that do have ETFs. And Scott Melker was showing this in his newsletter from yesterday, the WOOF Den, I believe is what it's called, that, basically relative to each individual ETF, relative to their size of the coin, Ethereum or Bitcoin, Bitcoin has seen about twice as much inflows into the ETFs as Ethereum. And I might have that incorrect as far as the relativity and stuff like that, but there's been a lot more inflows into Bitcoin than Ethereum. But I feel like the Ethereum ETF has kind of created like a second layer to what could be alt season, is that if Bitcoin runs up a bunch and it's just, way overbought, people could be rolling those funds directly into the Ethereum ETF. And then that would be like the first stage of alt season. And then once ETH and Bitcoin have really topped, then those looking at the ETH and Bitcoin prices might look at the other alts and say, hey, those are at a real discount. I'm going to get those, even if I have to do it on an exchange rather than via an ETF. That's going to be a nice way to roll money kind of down the chain there from Bitcoin to Ethereum, and then all of the others that don't have ETFs. So I find that to be kind of an interesting aspect, that maybe the ETH ETFs, which I believe is ticker symbol ETHE. Maybe that has just added another layer to alt season. But anyways, let's flip over now to ticker symbol URA, which is the Global X Uranium ETF. You guys will have to let me know if you want me to still continue covering uranium. I'm just holding my Oklo position. It's very small. I've got a stop loss just chilling. But yeah, I mean, uranium, ticker symbol URA, has been consolidating up here around 28, which I have suggested that would happen. This does seem like maybe it's putting in a bull flag, but let's look, kind of consider the volume over here, and we can see that considering these candles, it's really just been kind of flat with volume, although this widespread candle with lower volume suggests there weren't that many buyers down here, because while there was a big move, that does suggest that there were buyers pushing up, but it's not just that there were buyers, it's the number of buyers, and this volume suggests that there weren't that many buyers down here on this dip, but there were enough to push it up higher. And you can also kind of compare this candle with the candle over here, because they do look pretty similar. This one does have lower volume, so that just means that, and it even dipped to lower, that there were a smaller amount of buyers down here. So maybe it suggests that it's weakening, but this also could just be a bull flag forming before the next leg up, which would suggest price getting to around $30 a share, so about $2 more to go. But now I am going to switch over to the other tickers on the list, which I'm just going to go over AMC real quick here, which did get its first close above $3 in quite some time, so closing at 301, up 3.79% on Tuesday. But now trading a little bit lower, just below $3 a share in the pre-market. And the thing I wanted to note about this is, I do have this doodle here, both of these doodles, one of them being, the inverse head and shoulders pattern that I think we could be forming, but we also could be forming something like that, but with this purple dashed line serving as the neckline. That is where AMC raised capital in the past, so it could be bumping into some resistance there and forming, a shoulder here before then going higher. So something to consider there. And what I might want to do is, let's see, this little arrow there, that's kind of the intermediate. This is the most bullish, so I'll make that green. And then this one, actually, I should probably make this one yellow. And this one, having a little bit more of a dip to go, that one will be orange. And so that is, and actually, sorry, I'm going to change the colors again. I should make this purple so we know it's associated with a head and shoulders, inverse head and shoulders pattern. This one I should make yellow again, and this one I will make, I should actually leave it yellow and make this one orange, because these are just, levels that suggest that there could be pullbacks on the way higher. And the thing that I wanted to point out that makes me think this orange pattern could be happening, I've been learning more about Wyckoff analysis. I've been reading a book about it. I didn't get to read yesterday, hoping to read some more today before I head to work. But what we can see here is a pretty widespread candle that corresponds with a good amount of volume. Then we see a smaller candle, not much volume behind it, so that looks good. But then we see this big push higher, getting a higher close, but not getting a close above 318. I think that's a really important level. And so with this push higher, we have a lot lower volume. And so that does make me think we will be rolling over to test around 270 before we bounce. So do keep that in mind. But something that I don't usually do in these pre-market preps is look over at the data here from Unusual Whales. So just looking at the AMC max pain for this week, it is $3. So do expect us to close right around that level for this week. And then if we do look at the contract data, we can see, if I just expand the chart over here, the data from yesterday, we do have net call premium going up yesterday by about $150,000, whereas net put premium only went up by $5,600. But still, it's not millions of dollars, so that's nothing too crazy. If we do go back over the past week, we did see this day, which would have been, let's see, Friday the 16th, net call premium went up over $500,000, whereas net put premium went up by slightly over 100,000 up to 119. So this does suggest more bullish sentiment here, more buying of contracts than buying of puts. So I do think that is good. But then if we do come back to the charts over here, the next one that we have on the list is Big Bear AI. And so this is one I was holding a very small position in. I had taken profits up here on both a call contract and some shares. But then I started to buy back on the pullback. But then I decided yesterday, well, I mean, part of the reason why I was buying back is because I thought I was still holding a contract. I'm not anymore. And so I think it's a good idea if one is holding a contract going long and shares, it's good to wait to sell the shares until after one has sold the contract, because if you're holding the contract, that means you think price is going to go up. If you think price is going to go up, you should hold the shares because it's lower risk. But I'm no longer holding shares in Big Bear AI, which is ticker symbol BBAI, which closed at a price of $3.55 yesterday, down about 4.57%. And so the reason why I didn't really take profits, I just sold at break even, but decided to stop buying, is just because I'm getting spread too thin. I did open up a position yesterday on Peloton, and so I wanted to go over that. But yeah, I mean, I think it's kind of bad when, I made money on this going up, so I kind of get attached to it. I fall in love with it. I like making that money. And there is an example that I have in this video that's a cautionary tale of that. And yeah, just because I made money on it now or just recently doesn't mean I'm going to continue making money. So I kind of wanted to take the risk off the table. It did pull back to 550, where it hit a low on Monday the 19th of $3.44. So maybe that was a dip buying opportunity, but maybe it's starting to put in a bear flag. I am not sure. I do believe if we look over at the 4-hour time frame, we can see something pretty interesting with it. But I just wanted to pull up Mr. Chart Norris's charts here to pull up BBAI. I believe on the 4-hour time frame, he has seen, oh no, this is actually on the monthly time frame. This was posted on the 28th, but 19 hours ago. 4-hour time frame forming the right shoulder of inverse head and shoulders. And so this is from May 20th. So forming this kind of cup and handle over here. And yeah, so let's look at this on the 4-hour time frame just to see what he's talking about. And so we can see, yep, it looks like a little bit of an inverse head and shoulders pattern here. So this does seem like it's a dip buying level, pretty much right around 350, confluence of levels here. So maybe there's something with that, but maybe this is starting to show some weakness. I don't really know, and that this does break down. So, I mean, potentially, based on his analysis, forming right shoulder of inverse cup and handle, yeah, I mean, this could definitely be going higher, but it also could break down. It could break this uptrend. So, we'll be good to keep an eye on that, and I might actually... Yeah, I'm just, I don't have enough cash on the side to be spreading myself too thin, but I guess, I can pull up the contract that I was holding with it, which was the $10 strike call that expires in January, so 240 days between now and expiration. So let's just look at the data over here to see if it looks more bearish or bullish. So what we can see is yesterday, net call premium did go up by about $67,000, whereas net put premium went down by nearly $40,000. So generally, net bullish with this number in the calls being higher than the puts, but it's not really tons of money. It's not, whales moving in on this. We go over the past 7 days. We do have from May 13th, which would have been, I believe, let's see, Tuesday of last week, if I'm not mistaken. We have the 16th. So, yep, so that would have been Tuesday. We do have net call premium going up by, let's see, about $1.5 million, whereas net put premium went down by nearly $200,000. So that is generally more bullish. But following that, we did see price pull back. So yeah, I mean, that could be suggesting that we're just seeing some nice discounts before this does go higher. And then looking at that contract, I previously had a limit dip buy at 30 cents. But what we can see from the table over here is the lowest low that we've seen was actually on the 13th at 29 cents. Didn't have the order placed then. And then the lowest that we've seen following that was on Monday the 19th, which was 32 cents. So I didn't get a fill there, obviously. But yeah, I mean, maybe it's worth risking 30 bucks. I'm not really sure. But yeah, just sitting on the sidelines, don't want to be chasing and or spreading myself too thin. Cheering for people if this does go higher, but I just need to manage risk, manage my portfolio. And on the note of doing that, SoundHound AI, ticker symbol SOUN, did close at a price of $9.97, being down almost 3% on the day and closing below $10 a share. If you do follow the channel, you will know that I did have a stop loss at $10. So that did get hit yesterday. I took a very small profit because I think my average was like 978, something like that. But yeah, this falls in line with Big Bear AI, and that just wanting to take the risk off the table. Maybe this comes down to around 955, and I have to say that I'm kind of, because of Mr. Chart Norris's coverage of Big Bear AI, I'm kind of more intrigued by that one. However, personally, I'm a little bit more intrigued by SoundHound AI because of this purple line here at 1025, which was the pivot high from, it looks like, Pi Day of March, 14th of 2024. And then I just kind of have this drawn out as being, a cup and handle pattern there, which we did break out, got a very nice move to the upside. So, I'm very intrigued by this one because of that. But at the same time, this could, break below that level. We're currently got a close below it. Maybe this heads down to around $8. So I'm just going to sit on the sidelines for this one as well. I would have to say that, I do have a lot of confidence in Mr. Chart Norris's analysis, and I do see what he's talking about in the chart. So maybe I would be up for a swing of a BBAI contract if it did come down to 30. But, just sitting on the sidelines. And part of the reason, a big reason why I'm happy to be sitting on the sidelines is because I have been with WOOF Speed, which is ticker symbol WOOF. If you guys aren't aware, this came down yesterday during market hours of over 10%, closing at $3.13. But then in the overnight, in the after hours, this plummeted, currently trading at around $1.16, down over 60% currently in the pre-market. And that is because they announced, let's see, where's the news up here? WOOF Speed, it's behind me, so I guess you can't see it. So let's see. WOOF Speed plunges 56% on worries about the chip supplier's financial health. I'm sure Gareth Soloway will cover this because he has covered it during his game plans, which he will be streaming in about 15 minutes, actually 13 minutes. And so WOOF Speed stock WOOF, creator 60% on bankruptcy news. So yeah, good to be cautious, good to not fall in love. I have made some money swinging calls and I believe shares, but mainly calls with WOOF Speed. I've decided to sit on the sidelines because I didn't want to spread my portfolio out too much, didn't want to spread my attention too thin. And also, some of these do file for bankruptcy. And so if we do look over at the 10-minute time frame, we can see this massive sell-off just after close into the after hours, hit a low of 105. And we can actually see WOOF Speed down 58% on a Wall Street Journal article that it's preparing for bankruptcy. So good to keep that in mind that this could be tanking, but it is preparing for bankruptcy. So maybe it's rumor that it doesn't end up happening, but it could also very much so be happening. And I do think it is also interesting to note that, following this big red candle here, came down 44.9%. There was a nice little bounce there. So, if you bought the low exactly and sold the top exactly, that's a nice 30+% swing, but it did go lower. And so I think that this is generally just very risky. I think that this could very well end up going to zero. So personally, I'm not trading it. I'm not buying it. I'm not looking to take advantage of this volatility, although there are some that were able to take advantage of the volatility. And if we do look over at this contract here, this is one that I had been looking at, I believe, which was the 20. This is one that I had swung in the past. We can see that this is the $20 call expiring in January, so 240 days from now. I think this one's probably going to zero. Did hit a low yesterday of 16 cents. I'm sure it's going to be a lot lower today. But if we do look at the general WOOF speed, net call and put premium, we can see that over the course of the day, net put premium increased by, let's see, $3.76 million. So quite a lot there. But I do believe there were actually some buys of puts at the end of the day, but I'm actually not seeing it in the data here, and I'm not really going to get too much into it, but we do see this big spike here, and that was with net call premium net put premium being at 3.76, then it going up to about 5 million. If we do look at this data over the past 7 days, yeah, I mean, we can see generally just a lot of put premium. So whoever bought and held those puts over the course of the day, they're going to be making a lot of money. But volume is negative, so that does suggest some selling. So kind of interesting there. But yeah, let's look at now the final one on the list, and that is going to be Peloton. This is one that I saw a post that got me intrigued about it, and so I decided to dive into it a little bit myself. And so if I do go to the home tab here, pull up the Bronx Viking, search his page for Peloton, he had a nice post that got me thinking, well, maybe I should look into it a little bit more. So looking at the latest post, so 45 minutes ago, he did share that Peloton is leading the Unusual Whales open interest increases this morning with nearly $75,000 of those $7 calls bought to open. So opening calls, that is bullish. And, he was pointing this out yesterday, and then also 15 hours ago, Peloton, same vibes as SoFi last month. So, I think that is a good sign. Peloton, rocket push, push, push. And it looks like someone added over $1.2 million worth of Peloton $10 calls for July, expiring in 2026. So those are some leaps, and then back on May 8th as well. And so this is kind of what got my attention. And rather than drawing it up in, Webull, I thought it would be fun because I've been getting more familiar with TradingView thanks to crypto. I thought it'd be fun to do some analysis over here. And what I saw was, hey, it looks like there could be an inverse head and shoulders pattern forming with the right shoulder nearly being completed. And then you also might notice that there's, got the right shoulder denoted here, that on the bigger time frame perspective, this is the daily, but just taking a step back in time, it does look like we have an inverse head and shoulders pattern within an inverse head and shoulders pattern. And so I do believe, let's see, I'm not sure where I have that on here. Oh, yep. Is there an inverse head and shoulders with an inverse head and shoulders for a right shoulder? Probably not, but maybe. And so I posted that, and this guy said, inverse head inception. So I thought that was pretty funny. And so, yeah, this would be suggesting if we do get a measured move, so from the head here to the, basically straight up and down, if I can, then let's see, get a move on that. Those always disappear, so I need to get, click on the chart. And so let's see if I do get that measurement tool, and then if I hold it or by pressing shift, I think maybe I can, nope. Okay, so let's see. I'm just going to do this. This went up. Let's see if I just, okay, so I'm just going to do this approximately. So the midpoint of that is, straight up to the neckline. But let's say I just kind of move it to the armpit there, that cross right in the middle there, because breaking the neckline would be a little bit lower than it would be straight up. So like the intersection, so the midpoint of that line is just straight up from that head. But then if we get to where it would be breaking out, that would be down here. So let's just split the difference right around where the armpit intersection is. That would be suggesting price could be getting up to around $40+ a share. It looks like 43 to 44 with it currently trading, at where it's at. So let's just take a measurement of that. And that would be suggesting price could be going up just to like around 43. 500%. So yeah, a lot of upside potential with this one. And if we do look up the data over here, this is the contract that I picked up. I did pick up one of them yesterday at a price of $65. Was it 65 or no, I think 75. So I was looking at this yesterday and thinking, hey, maybe this dips and I get a discount, but maybe it doesn't. And then I'm left, wanting to chase and not being able to. So what I did is I actually have one share. I forget what my price is. I left my phone in the other room. I've got one share, I believe at, let's see, what's it currently trading at? I believe 665. So I am in the green on that, just one share. Then I did place a limit buy for 75 cents for this contract. And so I do have that. And so I feel like I can pretty comfortably hold it just because, looking at the chart over here, it looks really bullish, a bullish pattern within a bullish pattern. Others seeing that this is looking good. The unusual whales options data looking really good. So, I got one of these and we did see it yesterday. If I do expand this for Peloton, not considering, that specific contract, considering all contracts, the net call premium increase of $3.21 million, whereas net put premium went down by about $115, almost $16,000. And if we do look at the bearable slider, usually it's around 50-50. Yesterday it was 65% clearly on the bullish side. So yeah, I think this is looking really good. I'm really excited about it. I don't have a limit sell for my contract at 20%. If it does pull back some, I will casually add to my position. If it doesn't, if it takes off, I'll kind of evaluate. But yeah, I could see this hitting up, let's see, what was I saying? $40. And if I do have a call with a strike of 10, that seems pretty reasonable. And the reason why I picked 10 is because that gets back to kind of this, armpit of that bigger inverse head and shoulders right around 10 there. You can see the orange line. So I think that's a pretty conservative target. But by January, I do think that this could be, maybe up to filling this. Actually, no, maybe not to filling that gap, but getting up to, 30s, 40s. And so I think the contract that I'm holding could be worth well over $75 a contract. I think it could be worth hundreds a contract. So I'm pretty excited about that. But anyways, with that being said, with about 4 minutes before Gareth Soloway starts his game plan, I'm just going to open up the chat. Hydro Hustler, what is up? Let's see. WOOF, I'll pull that up real quick. And then I will also add IBRX. So I have gone over those recently. And so I'll just kind of go over them real quick because I would like to get to, I'm actually going to turn my TV on over here so I can be prepared to watch Gareth Soloway as I, prepare myself on the computer over here. But yeah, looking at WOOF, I did have this level mapped out here, 383 basically, did close above that at 386. And so I had previously suggested it could be pulling back to some of these levels to the downside, or maybe I had talked about it already having tested them. And so I'm just going to clean this up by just including the 618 as it did get a wick down to that level at around 287. So looking very nice there. And I'm going to color that green because it was very clearly a dip buying opportunity there. And from there, it did go up. Let's see. About 35%. So very nice move there from that. Let's see, did I do that from here? Yep, about 35%. And so that does seem like it could be getting into some resistance there. And then let's, so I feel like generally just looking at this level, I feel like it's a good level to, well, not necessarily sell all, which I would say would be like red, maybe to trim, which would be yellow or orange. I'm going to say orange. That might be a good time to trim and then maybe see a pullback, a retest of like 350 as support. That does correspond with the wick high over here that was hit on April 2nd. The high was 358.5. So maybe that acts as support, but really you kind of want to look for the consolidation highs in my view. And that would be corresponding with the opening price here on April 14th, which was 341. So I've got this level marked at around 342. And yeah, so I'd say that could be acting as some support. So I'll color that one yellow because what we could see is maybe a pullback to there, find that as support before it then goes higher. So that is why, this could be a trim level because maybe it does go higher. I do have this doodle suggesting a price target of around 463. But if it doesn't get that high, then I'd say that, where it's currently at seems pretty reasonable. And if it does get to like 463, that does correspond with this yellow trend line here, which is based on the lows from the end of April 2024, as well as in August over here. So two notable time frames in the market when we hit lows. And so that would be corresponding with that $4.63. So I'm actually going to make that extension red. I would think that at least up here is, a sell at 463. And I guess this is, the problem of having multiple levels up here, the 100% and the 1618. I think right now it's a trim up here at 460, maybe 450. I think it's a sell. And yeah, let's also just think about too, considering the volume here and the RSI, we can see that as price has gone up, we see the length of these candles generally increasing. So let's see, this one clearly is smaller than the one here. So that's an increase. We do see with that corresponding increase in volume. So that does look good. But then if we just get, basically the approximate distance there and look over here, yeah, it's about the same size, but it's actually a little bit smaller spread in that price action from open to close. But we do see an increase in volume that's pretty notable. 7.6 million shares traded yesterday versus 4.55 million traded on Monday. So that does suggest that there is a little bit of divergence here, that volume is continuing to increase as the spreads in price are decreasing a little bit, but there could still be some more room to run, although the RSI does suggest that it is overbought, currently at 74.35, above 70. That does mean overbought. But this momentum is there. It could keep running. So yeah, I would say, basically like if I had a full position in WOOF and I wanted to hold it for the long term, I also wanted to be able to buy this dip. What might be a good idea is, let's say if I have 100 shares, maybe I could sell 25 of them, take a quarter of that off the table to then be able to buy back if it does dip at around 350, 340, somewhere around there. But if it doesn't dip, I'd still have 75% or 75 of those 100 shares to hold for a potential move up to around 450, 460. So, based on this momentum, I feel like it's probably going to continue higher, up to 450. But just to be managing that risk and to be able to buy back comfortably lower, those are kind of my thoughts on that one. So yeah, really cool chart, and congrats to you for, I assume, having been holding this. So very nice chart there. And then the other one is IBRX. I feel like I was a little bit speculative of this one. Yeah, thinking that this could be pulling back. And so up here, we do have a big wick, kind of, indecision with the open and close right around the same price, effectively a doji there. Kind of a spinning top doji with a big wick to the upside and downside, but bigger to the upside. But let's just look at this. As price has been going higher, basically from this red candle, we can see that volume has not necessarily been increasing. This was a little bit of a dip, but it has generally been increasing. But what we can see is that this volume from yesterday, from Tuesday the 20th, we can see that volume was 12.48 million shares traded, whereas over here on the 16th, which would have been Friday, 8.77 million. So we have an increase in volume of shares traded. So that's good. However, we see a much smaller spread from the open to close, and the share price versus what we saw on Friday, also with what we saw on Thursday. So big spread from open to close in price. And then, kind of lower volume relative to yesterday's volume. So that does suggest divergence. There is some weakening and that this could be topping out. So yeah, and also with $3 being a psychological level, whole dollar number did hit a high, of $3.05.5, but closed at $2.90, being below $3 a share. So in my view, that does suggest some weakness and that this could be pulling back to potentially find this gap that was filled. So my bad, this did not play out as I thought. So maybe pulling back to that filled gap, maybe finding that as support, and also finding this downtrend that I have drawn here. It's not a perfect level, so do take it with a grain of salt, but that does seem like there could be a confluence of levels here, getting down to like the $260 to $250 range. So at this point, if it does pull back, maybe it finds some support there and then bounces higher. So yeah, I do think that this has changed. My doodle here was clearly incorrect. Maybe the one that I just drew here will be incorrect, and then it pulls back and breaks lower, or it continues higher. But I could see a pullback to around 250 before the next leg up or a breakdown. So we'll have to kind of reevaluate around there. But yeah, cool chart. I hope that you were able to make some money, take some profits on this move up. But I do think it looks like it's starting to show some divergence between that volume. But I am pretty new to looking at volume and getting into the Wyckoff analysis of that. I'm early on in the book, so my analysis is pretty basic there. But yeah, I would look for a retest of 250, and then eventually, I think 460. Similar to a similar price to WOOF. So I was like, I thought I was just doing some fib extensions there, but not over here. But yeah, this downtrend had been acting as resistance, broke out. Now just need a retest to move higher. So 250, I think, looks good. But yeah, those are my thoughts with that. As always, those are just my thoughts. If you did find them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and I'll see you tomorrow in the next pre-market prep. Take care, you guys. Have a great Wednesday, happy hump day, and have a great day trading. I'll